Hello, friends. This is Kamal Sharma. It's my pleasure to welcome you to this earnings call for quarter one of financial year 21. I have with me Vinita, Nilesh, Ramesh Samanathan, Rajiv Pillai, and Arvind Botra. As you would have already seen that this has been a rather subdued quarter for us. You would get to hear reasons and our programs going forward. But primary, driver for this performance has been adverse product mix and some of the COVID-related impact in terms of cost, which may be one time, and also impact on sales in many of our geographies. But certainly we have our homework cut out for ourselves. Just to walk you through the details of the financial numbers, I will request Ramesh to do that for me, and then the floor will be open for Q&A. Thank you, and over to Ramesh.
Thank you, Dr. Sharma. And dear friends, welcome to our Q1 FY21 results webinar. This is the first time we're conducting the results discussion through an online digital platform, and I believe that if we find this suitable, we'll continue with this format in the subsequent quarters as well. Now, let me take you through the key aspects of our Q1 performance. We had already guided for a tough quarter because we had felt the tremors of the same, the impact of COVID in May itself. We felt that the impact of market disruption would be across all the regions, including the two of our largest markets, India and the US. However, our API business has outperformed this quarter. At 3,468 crores, we were lower than the previous quarter by 8.5% and lower than previous year by 9.1%. The US business has performed steadily always, as you would know, at $180 to $190 million the whole of last year. We actually saw this reaching 212 the last quarter. However, the US sales declined by 26% sequentially to $157 million and declined by 28% as compared to the previous year. This was because of demand contraction by 12% versus the previous quarter and over 6% vis-a-vis the previous year. The seasonality factor also played in, and therefore we saw loss of sales on oseltamivir, azithromycin, and the cephalosporins business. And there's of course the impact of metformin as well. India, one region where we have consistently performed over several quarters, there was of course the COVID impact, and the India region branded formulations saw a degrowth of 6% year on year, especially for acute products. As for IQVIA, Lupin's growth in Q1 was a negative 1.4%, whilst for the IPM it was 4.9%. In June, there was some revival of demand, but there was disruption again in July. But we do expect Q2 to be much better than Q1 as demand picks up again from August onwards. As I said before, API sales showed significant growth of 24.5% sequentially with strong positive momentum on demand as well as pricing. We expect a strong double-digit growth year on year to continue. On the gross margins front, we did well to actually sustain it at 62.9%. And this, despite the fact there was a sharp decline in US business, as I had stated before, is also the impact of higher freight costs. But all the same, we have been able to maintain the margins, underlying the improvements in our overall business. On the manpower front, you saw them actually increasing, but that actually is an aberration. Manpower costs increased this quarter on account of one-time spends in terms of specialty restructuring in the US and COVID-linked incentives. However, we do believe from Q2 onwards, we would expect the recurring benefits due to specialty restructuring to be called up, and we expect the overall absolute number to be lower than Q4. Overall, on the manufacturing and other expenses, including the freight, so the freight element, of course, was captured in terms of the gross margins itself. The expenses were higher, but they were significant by close to about 100 crores. But there was significant fall in manufacturing expenses in terms of travel, manufacturing other expenses in terms of travel, legal and consulting fees, sales promotion expenses, and the like. As you would recognize, this is obviously because it is not possible to call on doctors, so there was considerable savings on that, and of course promotions didn't take place and so on. But it's not necessarily something that's wholly sustainable. But having said that, it would be an endeavor and to take the digital means and try to sustain it at levels which are lower than ever in the past. As we normalize operations, we do expect some increase in the SG&A expenses, but the savings to some extent will certainly continue. On the EBITDA front, we're happy to report an operating EBITDA improvement of 1% over the last quarter. But as you recognize, this is without including Forex and other income. And we are confident that this EBITDA trajectory will continue to improve in Q2 and beyond. I guided for close to about 19 to 20%, but I'd also added in caveat, if you recall, that this is before taking into account the situation on account of COVID. We've reevaluated the entire thing, and we do believe that we should be able to close at about 17% without, of course, the impact of Forex or other income as we go forward. In terms of the outlook, we expect operating margins to improve, as I just said. It is also because the fact that you would expect market share expansion of levothyroxine, return of Glumetza much before the end of quarter two. Customers start their winter buys, and they should help the products like azithromycin, cephalosporins, and oseltamivir. And of course, there's this much awaited launch of albuterol in September. In addition, we've also partnered for a few products, and that we will be launching in the next couple of months. Aided by tight control on manpower costs, SG&A expenses, and rationalization of costs on the specialty front, we believe that we'll be in a position to kind of boost the margins. In terms of the ETF, which has always been a sore point, it remains high this quarter, but we expect it to improve in H2 because of the ramp up in sales and of course the specialty restructuring. For the full year, we believe that the ETR would be between 35 to 40%. With this, I would like to open the floor for discussions.
Aditya, please announce the Q&A queue to be gathered.
Yes, sir. Thank you, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may raise your hand from participant tab on your screen. Participants are requested to use headphone or earphone while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. As soon as someone raises their hand to ask a question, the lead operator will enter the conference and announce the participant in this way. The first question is from the line of Dash from Dash, and he will say, please go ahead. Thank you.
The first question is from Neha Manpuria. Please go ahead.
Thank you so much for taking my question. My first question is on levothyroxine. We have seen competition, come into the product. Some of our peers also indicated price erosion. So what sort of a opportunity do we see? Are we still confident of a market share ramp up in levo?
Yes, Neha, we are well on our way to ramp up share with levo. There certainly have been a couple of new competitors, some just switching, like Lannett for Sandoz, and recent ones we just learned about Strides. But if you look at the levo market over the last 5 years and look at the new entrants, especially the small entrants into the market, it is not an easy product at all to ramp up. It really takes a combination of strong delivery from a supply chain standpoint, position from a manufacturing standpoint that is different from a typical oral solid product. So while we see some additional competition, we still see a significant opportunity in Levo. And as I mentioned, we are well on our way to ramp it up.
Vinita, what would be your market share in Levo currently, and what would be let's say contracted share against where we are?
So right now, contracted is 12%.
Okay, and this can get to higher levels, let's say high teens?
Yes, we hope to get it to high teens.
Okay, my second question is on metformin. Sorry, I missed it in the opening remarks. But is the recall included in the first quarter number? And did I hear correctly that this should come back by the end of second quarter?
That's right. The recall was included in the first quarter number. The best we could in terms of reserving. And in the second quarter, end of the quarter, we expect to get it back into the market.
And the recall, sure. And the recall related costs and any potential failure to supply penalties, would that also be reflected in the first quarter, or you could see some more of that in in the September quarter?
So we have tried our best to create a reserve for it, and the impact of that we have taken in the first quarter, and hope that there will not be any incremental impact of the recall in the second quarter. But getting the product back into the market will, help us get some upside from the product quarter-over-quarter.
Fair enough. Okay, thank you so much, Vinita.
Thanks. I would request participants to call out where they are calling from, which firm, and to ask only 2 questions. You can always get back in the queue so that others get a chance. The next question is from Shyam Srinivasan.
Hi, thank you for taking my question. This is Shyam Srinivasan from Goldman Sachs. So the first question is on the India business. If you look at, you called out some qualitative color, but if you could help us understand the commentary around July being slower than June, and what are you seeing? I know we're just the first week of August, but what gives you the confidence that we will start to ramp this business back again?
Sure, Shyam. So obviously, we saw some of the COVID-related stocking in March, which continued into the first couple of weeks of April as well, and then the rest of April, May is where we saw a major reduction in footfalls into doctors, and therefore a subsequent reduction in demand as well. If you look at IQVIA, you see that curve with especially the acute being deeply impacted, especially in April, May, and you see the improvement in June. It wasn't that impacted on the chronic side. Very similarly for us as well, obviously May was bad. June we saw the increase, so we saw that we could open up. I think we went all the way up to close to 90% of our reps being back on detailing. We went to a call average of north of 6 as well. And then, as you know, in July, there were a series of lockdowns across states, which again brought it down to probably 70% of reps going and detailing. Obviously, July got impacted again because of that. August has started off much better, and we see increase. Typically, you would see that Q1 is actually a strong quarter for the India business, and Q2 is actually weaker than Q1 usually. We actually are currently forecasting growth in Q2 over Q1, and August certainly seems to be shaping in the right direction.
Yeah, Nilesh, thank you for that. Just would you like to give some guidance for the India business for the full year?
So I think obviously we've always grown at double digit, and that's based on the market growing at 8 to 10%. I think you've seen the trends. I think the market is possibly forecasted to grow anywhere from 0.2 to 3 to 5% is what we see. My personal feeling is we'll probably end up at 5 to 8% as a company.
Got it. Thank you. And my second question is just on the freight cost. I think Ramesh, you called it out. Is that 100 crores? And across which line item would we see that number, Ramesh?
I said the total expenditure has increased by close to 100 crores. There's, of course, the freight component that's captured in the gross margins line, but there are other line items which come below that, which is included the manufacturing and other expenses. And there's a small component that's gone into manpower also.
Got it. And just want to clarify just a point on manpower cost. You said it will be lower than Q4. So if I say 760 odd crores was Q4, is that the right number I should be looking at?
Yeah, so we expect it to be actually lower than 763 crores, which is Q4 number from Q2 onwards. Yeah, that's true.
Got it. Thank you.
Of course, I'm not accounting for any one-time expenditure that we might undertake for whatever reasons, but the base figure would, of course, not increase.
Got it. Yeah. Thank you. Thank you so much and all the best.
Next question is from the line of Nithya Balasubramaniam.
Hi, Nithya. I'm from Bernstein Research. So one quick question on ProAir, if you can update us on when you're expecting an approval in the US.
Sure, Nithya. So we're expecting an approval anytime now within August.
Right.
And plan to launch the product in September.
And in terms of capacities, do you have adequate capacities? What sort of market share are you targeting?
So we have adequate capacities for our fair share of the market. We do 20% plus on all our important products. So we'll be very strategic about the ramp up with albuterol. This is a very important, very valuable product for us as well as the industry. So we'll be very thoughtful, prudent about the build.
Got it. How are you seeing pricing shaping up in the market? We do have 2 generics already and 3 AGs in the market. So how has the pricing been?
It's been fairly stable, partly because of the fact that until the last couple of months, actually there has been a huge demand supply gap, right, because of COVID-related surge in demand. So the pricing has been fairly stable.
Got it. The other question I had was on India marketing expenses. I think we heard a bit of commentary that these are likely to be lesser than what it was earlier. If you can throw a bit more color on what kind of savings are likely to outlast the COVID crisis.
I can start and maybe Ramesh can add. So obviously, basically on the Ad Pro, sorry, Ramesh. On the Ad Pro, obviously there's a significant reduction at this point of time, in terms of promotion to doctors and the like. So I think some of the savings which will not replicate are the ones which are related to the field staff. So when they're working from home, obviously there's allowances and the like that you save as well, which becomes a significant number. But obviously for the rest of the year, there's a lot of stuff, conferences, there's a lot of that stuff which would not happen in all likelihood. Certainly international travel to conferences and the like would not happen either. So there would be savings which would certainly happen in the course of the year. But if you go beyond COVID, I think this has really been a great opportunity for us to truly embrace digital. There is, I think we've done 3,200 CMEs to date. We have done 200 training sessions for our representatives. The numbers are huge. We've done 30,000 teleconsult calls every day. So there's a very large number of, there's a very large wholesome embracement of all things digital at this point of time. I don't think it changes the market completely. Like I said, the footfall, more than 90% of representatives have been back on the job. Our call average is somewhere between 6 to 7 per day. So there's a fair bit of the old which is coming back as well. But I think it's a great opportunity to go beyond as well.
Okay, understood. Thank you so much.
Next question is from Sameer Baisiwala.
Sameer, you're on mute.
Samir, you can unmute it, I think.
Somebody else can take up.
Can you hear me now? Sorry.
Yes.
Yes.
Yes. Okay. Good evening, guys, and thanks for the opportunity. So, Vinta, can you update us on SoloSec? How is it doing in the market, and what's the way forward?
Yeah, sure.
Samir.
As you know that we went on the commercial, used actually.
I'm sorry to interject. Samir, could you mute your line? And unmute again?
Hear me now? Yeah. There's no echo. No, so I was saying, Samir, that we restructured our commercial infrastructure on the SoloSec front this past quarter, and as Ramesh mentioned, had a one-time impact based on that. As we were talking even in May, that the doctor visits in the OBGYN offices pretty much dropped off completely, were down 80%. And we saw scripts bottom out in April. Since April, into May and June, we have seen a ramp up in scripts, 10% in May, 20% in June, and continuing to see that for the most part in July as well. So we are seeing demand come back slowly, but it is coming back. Leveraging also the recent wins with Express Scripts. Just in the last week, we had another major win. Cigna put SoloSec in a preferred position. We're trying to drive prescription growth as much as we can. The team is just very focused on trying to be as nimble as possible, as doctors' offices open, get in front of the physicians as much as we can. I mean, as of now, it's just 10% of our targets, physician targets, doctor offices that are really open to face-to-face visits. The majority of the interaction is still virtual. But what is very heartening to see is that the virtual engagement is having an impact in script growth. We continue to work to drive that in the months to come. I hope that answered your question, Samir.
Yes, it does. Thanks. And so, Nilesh, just on your comment, picking on your comment in the press release, you talked about it being a pivotal year for complex generic launch this year, or your assets, key assets. So outside of Enbrel, Foster, and Albuterol, is there anything else that you want to talk about? And also, it said that pivotal year for momentum and compliance. So if you can update us on those four sides. Thank you.
I think you captured the three products. Obviously, those are the big ones. So, we've been investing in inhalation for, I think the last, 6 or 7 years. This is the year that we start delivering. Obviously, albuterol approval and launch, tiotropium approval. So there are multiple milestones that we will hit on inhalation. There are other assets that are under development, filings as well. So it's a critical year from the inhalation perspective. On biosimilars, at this point of time, it is etanercept from a launch perspective, which we intend to launch this quarter in Europe. Obviously, by the end of the year, we expect to file our PEG-G as well. So again, multiple milestones that will be there. And then switching to the compliance, I think we've had a very solid first half. The inspections that we had in the first quarter were all positive in terms of outcome. And we had slated this out to be the year of completely earning back our rightful space on the compliance front. Obviously, with COVID and with the restrictions, with FDA not really being in a position to do audits, I think there's a bit of a limbo at this point on our OAI facilities. But I think the momentum is to continue, and I think I think we are aligned with FDA in that everybody wants supply continuity, everybody wants for facilities that are compliant to be up and running. And I think we're obviously working with the FDA. We've made a lot of progress in sites, obviously Somerset, which we've already put up for re-inspection, but we've made a lot of progress at Goa, Pithampur too. Both of these are possibly in the next month going to be ready for re-inspection. And we're going to really work with FDA to see what would be the best way. I don't think there's a stated remote virtual audit process. There is certainly a document review process. There is a mutual recognition process as well. We'll have to push the envelope and see what will be the best way to do it. But again, from our own internal development, there's a lot of strength which is being built on the compliance front, and we certainly expect to take this to the finish line.
Okay, great. Thank you so much.
Next question is from Anubhav Agarwal.
Hi, this is Amanba from Credit Suisse. One question on albuterol market. I just want to understand how is the market now? Where is the demand-supply gap now? Is it still acute or this is normalized now?
It has normalized to pre-COVID levels.
Okay, so should we now expect that when you launch, it will be a normal launch where you launch at a discount to existing prices? You don't launch at, let's say my understanding right now, when you say the price has been stable, so is largely generics when they come at a 20-30% discount. The pricing for 2 generics and 3 AGs is largely around the branded level right now, even now?
Yeah, the pricing has been fairly stable for the players in the market. And we obviously will have to earn our way into the market. But as I mentioned, we're going to be very strategic about it. It's a large product, material product. So the typical 20-25% is not, for larger products, one has to be more thoughtful about the benefit that what you need to do to earn the business.
Sure. So, okay. And just on understanding this quarter US sales, just a couple of things I want to check. One, Epriso launch, did it reflect in this quarter? Would it reflect in the next quarter?
It reflected to a certain extent in this quarter and will continue to obviously reflect in Q2 and beyond.
So was there any product, let's say outside the metformin loss that we had and the seasonality impact, and where I'm including the azithromycin lower sales also, was there any other impact to the US sales which are there in this quarter? Any particular product that we see significantly lower sales which are non-seasonal? Because 157, I was shocked with that number actually.
Yeah, 157, we were very disappointed as well. But a part of it was a demand contraction, also exacerbated by the fact that the market, they stocked up inventories in March, right, ahead of COVID, or in anticipation of COVID. So we saw an impact across the line, just overall demand, even for the market, if you look at overall market. And then for our specific products, we saw a contraction quarter over quarter because of the buys in March. So that in addition to, the biggest part of the drop was still, if you look quarter over quarter, the biggest part of the drop was the flu season products. Those sultamivir, azithromycin, forins, as Ramesh mentioned earlier. And then metformin and the demand contraction due to the pre-buys in March.
So at the product level, other than metformin and the seasonal impacts, there was no change in our, let's say, any product level impact in our portfolio?
Not any material change. I mean, the material ones, like I said, were the flu season products and metformin.
Okay, thank you very much.
Next question is from Nikhil Mathur.
Yeah, hi. Am I audible?
Yes.
Yeah, hi. This is Nikhil from Ambit Capital. So just one question on albuterol first. So what gives you the confidence that finally the approval would be attained in this particular month and eventual launch would be in September? Is there a threat of a negative surprise on this front that the approval might be a bit delayed again?
Well, we certainly hope not, Nikhil, because we had expected to receive the approval by now, but there was a last-minute amendment that our API supplier made, which took it out of July. Otherwise, we would have got it in July. We understand the best we can from the indications that we are getting from the agency that all the review is complete, and that we should get approved pretty soon. We would launch, like I said, only in September. So, the added level of confidence we have is our player, to be able to prepare for launch has been accepted by the FDA. So it gives us the ability to get inventories across the border.
Okay. And can you help us a bit more understand that when you say that for certain larger products, and albuterol being one of them, you'll be a bit strategic in how to go about ramping up the sales of this particular product. So what do you intend to mean by being a big strategic? So does it mean that it would be more of a staggered launch? You'll be gauging prices initially and then eventually go for a full rollout?
Yeah, so we will obviously want to be able to gain a share with, while ensuring profitability. And we'll weigh our options as we gain share to determine how best to do that. Right? This is a good product long term in the next few years for us, and we'll want to use the next couple of quarters to ensure that we ramp up successfully with, not cause any material risks from a pricing standpoint in the marketplace.
Okay, and one final question. So it's been talked about that EBITDA margin reversal should start happening from 2Q. And sorry, I missed the guidance. If you can please repeat the guidance, that what kind of a exit EBITDA margin are we looking at in 4Q? So just one question tied to this would be, are there any explicit cost savings that are being budgeted for you to move up to say 17-18% gross EBITDA margins excluding other income?
EBITDA margins are always a function of three things. So essentially the kind of products that we bring to the market, the kind of cost, realize a cost, how much of cost you incur in terms of conversion and the like, and of course the various expenses in terms of J&A and so on. On the products front, there are quite a few products lined up, as you just spoke about, levothyroxine, ramp up. We are speaking about albuterol and the like, and of course the US business would bounce back in terms of the kind of volumes that you would see out there, the kind of value that you would see there. We've been indulging in cost initiatives for quite some time now. We've been working with impact consultants for in terms of alternate vendor programs and the like, and the impact of which will certainly be felt much more on the gross margins line as we go by. Apart from that, we are also working on several initiatives to bring down the costs on the below the gross margins line as well. And of course, on the R&D front, we will do what it takes to kind of sustain the expenditure at the same levels or even lower as we go by. With all of this, we're fairly confident. At the beginning of this year, we said we would guide to anything between 19 to 20% and perhaps a little more than that. But then we also took a step back, given the fact that there was this issue of the COVID. And after having looked at that, we believe that we should be in a position to look at least about 17% by the end of the year. The average for the year would be about 17%.
And this excludes other income, right?
It excludes other income and forex.
Okay. Thanks a lot.
Next question is from Girish Bakru.
Yeah, hi, this is Girish from Bank of America. Just first question, Nilesh, on biosimilar Enbrel. Would it be possible to share, as you're preparing the launch, will launch be across multiple countries or there are few select countries? And based on current capacity, if you could share what sort of market share can we expect?
I can request Vinita to talk about this better.
No, so we are the launch is going to be in Europe in the next few months, starting with Germany, which is the largest opportunity that will happen this month. And in the next quarter, we expect Mylan to enter France, Sweden, and a couple of other countries. But France will be the next major market, and then follow into the other countries. So it's going to be a build-up in share, since this is a hybrid model. It's a branded, hybrid play from a commercial perspective. As we look at what Mylan has done with other products, we certainly expect over time for them to get to a double-digit share.
And Vinita, where would, let's say, UK fit? I know probably we'll have to secure a separate approval for that. Where would UK fit in this?
UK is third wave.
Okay.
Yeah, we have Mylan has determined the launch sequence based on size of opportunity as well as pricing.
Right. And second question actually was on the API front. I mean, given you had a great quarter on the API growth perspective, and knowing Lupin is pretty strong in CEF and penicillin intermediates as well, are you looking for capitalizing on the potential opportunity that may come from the PLI scheme?
So we think that the PLI scheme is a step in the right direction. But it's a step. I think there's, the incentives are light at this point of time. In particular, there are, I think there's 6 or 7 products where we are reviewing very closely what we'd like to do. Some of it is connected to the PLI scheme. Some of it is actually just connected to the fact that it's about time that we ramped up share in some of those. Fermentation, for example, right? So some of it where there is over dependence on intermediates, we're seeing an opportunity to be able to step up. I think we're going to have to work as an industry with government in terms of tweaking the scheme so that 5 years later we're actually genuinely able to say this is what we did to reduce dependence. But other than that, I think it's an opportunity. I think for the API business in general, for the sector, it's a great opportunity to earn back the space that we had, which we lost over the last 10 years, whether it's intermediates, whether it's fermentation, whether it's API. And we, I don't think we're going across the board, but there's several sets of products where we feel that making the right investment will make sense now.
Right. And just on that similar thought process, Nilesh or Vinita, if you could just also comment on this, Trump order, which has, sort of in a way not deliberately used toward mandatory, but really preferring local manufacturing. I mean, at gross level, probably it looks like initially you will have some critical APIs, but do you think in the longer run, this is like challenge to overall Indian industry as well?
We actually think that overall it's going to be an opportunity for our industry, especially for the larger players that have a foot from a manufacturing standpoint in both countries. And from a near-term perspective, we really see this very focused around essential medicines related to COVID, very focused around government buys. And we get a very small percentage of the government business supplying out of India in any case, because there's a preference for local manufacturing. This order, depending on how it's executed, could mandate or give significant preference to local manufacturing on the government front, which, from our perspective, we see as an incremental opportunity. So, based on the conversations that we are having with the government, they are being very they are very cognizant of the role that India plays in the US supply chain. They are very, very focused on drug pricing, as we have seen in the other orders. And we as an industry have made them aware of the impact of manufacturing in the US versus India, the cost impact. They understand there's incremental cost impact. We do expect that this move towards manufacturing is going to be around areas of high national importance, which right now is, COVID-related products, anti-infectives, and a couple of categories that the government has highlighted broadly. We'll find out over the next couple of weeks and months how this transpires into actual products. But our expectation is, again, it's going to be essential medicines, more COVID-related in the near term, which will be an upside for us. Also, the government business opportunity will be an upside for us.
This was very helpful. Thank you.
Next question is from Nitin Agarwal.
Hi, thanks for taking my question. Vrida, on the Foster launch in Europe as well as the Enbrel, especially the Foster launch, how do you see the market opportunity, and how do you see the ramp up in the product going forward?
So it's a significant opportunity, Nitin. We expect it to be a limited competition launch. We expect to get approved at the end of this calendar year and launch in the fiscal year. It is going to be a ramp up because in our first country, UK, is going to be more of a branded play. So it is going to be a ramp up, but a significant opportunity for our UK business as well as our European business. It's been launched first in UK this fiscal year, and hope in the next fiscal year that will also follow its own timeline of registration and litigation. So will follow end of next fiscal year.
Nitin, if you can mute your call, mute your line in between questions.
Okay, sure.
What was the other question?
The other thing I was trying to ask is on Enbrel. Given the fact that in biosimilars in Europe have been extremely competitive from a pricing perspective, how should we look at Enbrel opportunity in this context, and the fact that Mylan is a relatively late entrant in this market now?
Yeah. If we see, the performance of biosimilars, and especially if you go market by market, the focus that Mylan has is on markets that are a bigger opportunity from a share and profitability standpoint. And we expect that they have the ability to get to double-digit share in those markets. And our focus, we're not going to look to get into every market. We're going to really look to get into markets that make the most sense from share gain and profitability standpoint.
If you can squeeze in one last one, Nilesh, the remediation costs that we are undergoing, are they a meaningful quantum on our cost side? And once the plant issues get resolved, should we see a likewise material impact on our cost going forward?
Yes. So there is, while it's not increased over the last couple of years, there is significant remediation cost, especially some of the third-party consultant work that we would work, especially for example in Mandideep, where we have a warning letter. So those costs are ongoing. They're actually lower with COVID because everything is being done only remotely. And we actually are now selectively re-examining. I think, if you go deeper into our compliance issues, one of the big areas was investigations. I think we've been able to now start inspiring confidence in our actions on the investigations front. And I think that gives us the opportunity on what is the best way to structure this so that we take more of an internal lead rather than a third-party lead on that for some sites, and other sites where we feel that we still need to have that input, we do that. So I think we're looking at the scope of third-party work. We're examining that very closely at this point of time. I would see a decline this year versus last year even, and then going forward that should come down even more.
Thank you and best of luck.
Thank you.
Next question is from Harsh Beria.
Hi, this is Harsh Beria. I'm a professional investor from Switzerland. My question is more over the next 5 to 7 years, like with the ramp up of the specialty and the biosimilar divisions, how do you see the top line moving from the current 2 billion levels over the next 5 to 7 years?
Yeah, so if I may take that, Harsh, certainly see the potential on the back of the complex generics, biosimilars, and specialty to really get to the consistent double-digit growth year after year for in the next 5-7 years. From a portfolio evolution standpoint, we have significant opportunities starting with the rollout of a complex generics assets this year, with albuterol and Foster, on the inhalation front this year, plus Enbrel on the biosimilars front. On the specialty front with Namuscla. Namuscla is ramping up very nicely as well. In Europe, we're looking at the potential of getting it into the US market and building on Solosec, on the specialty front in the US. As we look at the next couple of years, we have a whole pipeline of these complex generic assets and these platforms playing out. After albuterol and Foster this year, we expect in the next year we'll have, of course, the full year impact of albuterol, plus we'll have other inhalation products, Brovana that we approved for, Performist that we expect to get approved for, Dulera that we have filed, and then Spiriva in the following year. So the inhalation portfolio will play a material impact in the next couple of years. On the biosimilars front with Enbrel starting this year, a full year impact next year, plus pegfilgrastim coming into the market in fiscal year 23. When you start seeing impact of biosimilars in US and Europe over the next 2 years, and then the injectable portfolio coming thereafter. So we really see this, all of the investment that we have made on the complex generic front, we are right at the inflection point to, benefit from it in the next couple of years, driving top line growth, hopefully on an annualized basis, but in a 5-year time frame, double-digit growth.
Thanks for that very comprehensive answer. A follow-up to that would be, so going forward, let's say 7 to 10 years ahead, do we think of spending more on R&D from the current 10% of sales revenue to maybe making it up to 15 to 17%? And also, how do you see the margin trajectory with these products kicking in?
Yeah. So actually, we believe that our R&D level is at a point from an absolute standpoint that we should be able to manage within over the years to come. So we are looking very hard at R&D investment. Obviously, we want to continue to build these, our business based on the complex generic assets, which are a big part of the R&D investment. And we hope to be able to maintain it at that 10% or hopefully with the revenue growth at below the 10% level. So definitely looking hard at that line. And likewise, as Ramesh mentioned earlier, the other lines, as we look at the EBITDA trajectory, with the complex assets improving our overall gross margin, and our efforts on the operational front, operational efficiencies that we've already got some benefit from in the past year, but material benefit, we're expected to get a good size benefit this year. A little bit delayed due to COVID. We certainly will have that benefit fiscal year 22 onwards. Plus all our initiatives around manpower cost containment, which you will see, like Ramesh said, Q2 onwards, our manpower cost will be below the Q4 level. We're very determined to keep it under control and make sure that we are getting the right productivity from a manpower standpoint. Likewise, on the SG&A front, we see potential for improvement. I mean, we've seen some savings just as a result of COVID and COVID-related cost, travel and promotional costs. We'll see some ramp up, but we certainly see a real opportunity to bank savings on that front as well. So as we look at, the impact of our portfolio and building up our revenues, with the complex assets, biosimilar specialty, plus the strong control on the cost lines, in particular manpower, SG&A, and maintaining R&D at under 10% of net sales, we expect to get our EBITDA margin to the right level, in the 20s.
And can I squeeze in a very small third question? Yesterday, you guys released that you have...
Can we restrict to 2 questions? We have a long Q&A queue, and sure, we need to accommodate as many as possible. Sorry for this, please.
Yeah, that's fine.
Yeah, the next question is from Sayan Mukherjee.
Sayan, you're on mute.
Sayan, you can speak now. I think we can move on. Sayan might have some technical issues. Can we move on to next question from Charulata?
Hello. Yeah, I am from Dalal & Broacha. My question pertains to metformin. Is the entire recall done with, or there is some more to come? And secondly, with the NDMA in metformin, do you see doctors moving to some other molecules or combinations, like it happened in the sartans?
So on the first question, we have provided as best we could into Q1 the impact of the recall, and hope that was sufficient. We shouldn't see any further impact in Q2, and as I mentioned earlier, hope to see some upside with the relaunch of Glumetza generic in Q2. We really don't see a switch of metformin into the products, because the NDMA issue impacted multiple players in the marketplace. It didn't impact everybody, and we ourselves have been able to work around the NDMA issue, and that's why I have the confidence of getting back into the market in Q2. So the market has been supplied in the near term by players that did not have an NDMA issue. So we don't see the market really changing in any material manner.
Okay. Yeah, and would you see an improvement? Don't you expect to see a major improvement in EBITDA margins after launching Enbrel in Europe?
Yeah, so Enbrel is going to be a build-up. As I was mentioning earlier, it's a branded model, hybrid branded model, and it's going to be a build-up of share, not like an INN generic or a US substituted generic where you have the opportunity of taking major share day one. So it will be a ramp up, but a material opportunity in the next 2 to 3 years.
Okay. Thank you. All the best.
Thank you.
Thanks. Next question is from Prakash Agarwal.
Hello.
We can hear you.
Hi. Hi. Good afternoon. Prakash from Axis Capital. So my first question is, in the opening remarks, I made some comments. I just want to know if you have, called out from the $200+ million to 157. Have you given specifics, like little bit or color on the quantum of Glumeza loss of sales, apart from the seasonality and the COVID related you talked about, but any color on the size in Tamiflu and Glumeza? And when do we go back to 200 again? It would be Q3 onwards. Some color would help.
Yeah, so we didn't, provide any more in terms of actual product numbers, but roughly what we said, of the 50 million drop, Prakash, more than 50% was the flu products, Tamiflu, azithromycin, Cefs. And the balance was a combination of metformin and the demand contraction due to the pre-buying in March. So we expect in the next 2 quarters, Q2, things will certainly improve as we are looking at demand per se and, the flu season products also coming back into the market, hopefully before the end of the quarter, the winter buys. And albuterol, some impact in Q2. But we certainly see Q3 onwards the ability to get back to that, we were doing $180 to $190 million, pre-COVID, get to that level and beyond Q3 onwards.
Perfect. That is very helpful. Thank you. And second question is on the US FDA side. So are we giving any color as a base case since we have already submitted for reinspection for Somerset? When do we expect as a base case resolution, and same for Pithampur and Goa?
So we have informed the agency that we are ready for Somerset. They are doing face-to-face, the on-site inspections in the US, but for mission critical projects first. So we hope that we're going to be part of the mission critical. We have an azithromycin supplement also filed from Somerset. We are hoping that that will trigger an inspection sooner rather than later. It's very hard to really predict the actual timeline, but for the efforts that we're making on COVID-related products, that hopefully should expedite things.
Okay, perfect. Thank you and all the best.
Thank you, Prakash.
Next question is from Kunal Dhamesha.
Hi, thanks for taking my question. So the first question is clarity on the albuterol. So you alluded that we are expecting 20% plus market share. So is it the 20% market share of entire albuterol market, or is it for the ProAir franchise?
First of all, the 20% is going to be a build-up just to manage expectations here. And we look at the entire albuterol market, not just ProAir. We actually targeted ProAir because it is the largest brand in the marketplace and allows us full access to the market.
And second question is on the tax rate. I think the tax rate in Q1 was significantly higher, and while you have guided around 35%, so is there any change in the guidance now that we have a significant higher tax rate in Q1?
No, because of what has happened in Q1, we are saying that it will actually be a little higher than what we had earlier guided, but it's certainly not going to be the same levels as the current quarter. It will come down significantly. We expect it to be anywhere between 35 to 40%.
And for the future years, what would be the progression of Texmi?
No, it'll be back to the 32, 33%, over time. Yeah, for sure.
Thank you.
Thanks. In view of the question queue, we will extend the call for another 10 minutes. Next question is from Krishnendu Saha.
Go ahead.
Aditya, next question is from Krishnendu. Can you unmute him?
He's unmuted.
Sir, we have already done.
Hello, can you hear me? Hello, can you hear me?
Yes.
Yeah. Vinita, you spoke about marketing approved by FDA. So, just wondering, do we have any contracts in place have you gotten any contracts with somebody in the US on the Nilesh or the levothyroxine expanded capacity which we have? What kind of utilization is it running at right now?
So I couldn't get your voice was not clear. Can you repeat the first question?
Yeah. You spoke about there's some marketing activities in the US for albuterol, which is approved by the US. I thought I heard that. So is there any contracts which you have already on the verge of signing, or you are with contracts with people for albuterol?
Yeah, the pre-launch activities are ongoing for albuterol.
On the capacity utilization, sorry.
Okay. Yeah.
On the capacity utilization for levothyroxine, we actually had a good trot there. So we've been loading inventory for in anticipation of offtake. I think we're in a good position overall.
Any number, or it's like we are good enough? That's what I can get.
Yes, it's good.
Thank you.
Thanks. Next question, we have a follow-on one from Nithya Balasubramaniam.
Yeah, hi. A very quick question on the partnership that you announced yesterday. If you can throw a bit more color on what these assets are, and are these short-term opportunities FY22-23? The partnership with Fordos Pharma.
Yes, sure, Nithya. So very pleased with the expansion enhancement of our injectables portfolio with this partnership with Fordos. We have two products in the partnership, doxorubicin liposomal, as well as Ambisome. Further along on Doxil, we expect it to be filed next year, and Ambisome the year after. So they certainly are calendar 23, probably will miss fiscal year 23, given our year ends in March. Probably will be fiscal year 24 opportunities, but certainly significant enhancement to our injectables portfolio.
So these are products that are likely sold through specialty pharmacies. Do they require any additional capabilities when it comes to your commercial infrastructure?
Yeah, so we have been in the process of building into institutional, commercial strength in the organization, just given the portfolio that we are focused on. With all of the focus on the injectables, in the near term, we have a few simpler products. In the next 2 years, I would say, is going to be simpler products that are a decent opportunity. Second, we have pegfilgrastim that we expect to file this fiscal year. We expect to be in the market, in fiscal year 23. So we are building up a commercial strength to be able to participate effectively, both on the injectables as well as the biosimilars. There's a lot of synergy on the commercial infrastructure for both.
Are you likely to commercialize the biosimilars in the US on your own, or are you looking for partners to do that?
No, we very much expect to commercialize on our own, especially the first couple of products. pegfilgrastim as well as ranibizumab. Those would, the kind of infrastructure we will have in place for our injectable generics, we can easily leverage that for those two products.
Thank you. Thank you, Vineet.
My pleasure.
Next question is from Rishikesh Patole.
Hi, thank you for the opportunity. Vinita, just to follow on albuterol, one aspect you said was pricing is fairly stable, right? So other aspect is interchangeability. So as you mentioned, you're targeting the whole market from the players that are already there in the market right now currently. Are you witnessing interchangeability already?
Well, we haven't launched as of yet, right?
No, from the players that are already there in the market.
Yeah, I mean, we have seen.
How is the market like shaping up like?
So
is it going to be gradual or is it going to take time?
Sorry?
Is it going to be gradual interchangeability?
No, we don't see the interchangeability gradual, especially for ProAir, which is the largest part of the market. If you look at the shares right now, the ProAir generics are doing pretty well. Also, the Proventil, overall has taken a little more of the market, really at the cost of GSK, the Ventolin product, and its AG. So we see ProAir as, very giving us access to the entire market from an interchangeability standpoint.
Sure. And if you can help me with the branded revenue figure in Q1?
Yeah, branded business was very severely impacted. As we had mentioned also in May, was down 45-50%. So from the $4 million base of Q4, it was $2.5 million in Q1.
Thank you. That will be all.
Thank you. We have the last question, which is a follow-on from Sameer Baisiwala.
Yeah, hi. Thank you so much. So there's a couple of questions. Is it fair to say that albuterol authorized generics are being supplied from the branded companies? So the costs are quite different from yours. And is there any other competitive difference between having a pure generic versus an authorized generic as a competitor?
Sure. Please. Thank you. To your first point, the authorized generics are from high-cost facilities, primarily in the U.S. In fact, even the largest generic, the ProAir generic from Perrigo, is from Catalent, which is a U.S. facility, so a high-cost facility. I believe that both ourselves and Cipla have a real advantage with the product out of India. I think the fact that we have a couple of U.S. manufacturers in the mix really helps us keep that pricing stable. As we look at the market evolution over the next couple of years. Sameer, can you repeat your second question?
No, and is there any other competitive difference with authorized generics, or is this the only difference? Versus you have.
Yeah, I mean, there was some, some of the mail order, in the past have preferred the brand, keeping the brand, but when you have a couple of players, two players, you typically see a switch, So we really don't see, we're looking forward to really accessing that market. Have seen a tremendous level of interest.
Okay, one final one from my side, if I may. On metformin, when you go back to market, you get all your market share back, all your customers back, or is it rebuilding all over again?
We hope we get. Sameer, would you please mute? Thank you. So, for the last 5 years, we've been such a strong player in the metformin market. From a supply chain perspective, we have really built a very strong relationship over the years, and believe that we have the ability to regain our share. Hopefully we'll be able to regain majority of it.
Okay, great. Thank you so much.
Thanks a lot. With this, I would like to hand over the days to Dr. Kamal Sharma for closing remarks. Sir, please.
Yeah. Okay, friends. Thank you very much for your participation. Hope you had adequate answers to your queries. Look forward to connecting with you again next quarter end. In the meantime, stay safe and stay healthy, and good luck. Thank you very much.